Hey guys, AKIL'S here. Welcome back to another video episode of the Trading Coach Podcast. Today, I'm going to do something I haven't done in years, and that is respond to a troll. Now, you know what they say? Do not feed the trolls. The best way to get rid of them is to just ignore them and they starve to death or go leech onto someone else. But in this particular situation, I thought it was a great educational opportunity. So I want to flip that negative into a positive for you guys today. Now, don't worry if you're not on a platform like Spotify or YouTube where you can see the video version, you can still get the greatness from audio. I am going to share some charts and probably add little fancy, funny graphics because I know my attention span is short, so is yours. So we try to chop it up and make this thing as fun as possible on the video episodes. So it all started about a week ago, as the great Jay-Z once said. It was all good just a week ago, right? And I shared a trading idea on TradingView. It was a trading idea on the dollar index. We actually followed up on that this week in the Trading Edge video, showing a few different opportunities. There was a cipher pattern, there was a structured trade, and there was a trend continuation trade as well. And I got a response specifically to the cipher pattern saying, Akil, your D leg is wrong. This is going to fail, blah, 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 blah. So let's start here by looking at the cipher pattern. Again, for you guys that aren't watching on a video version, just follow along. Our cipher pattern is an advanced pattern formation. It is a 5-point move. In the particular case of this one, which is a bullish cipher pattern, meaning we're looking for a buying opportunity at the end, it starts with an initial leg that we call an X to A. That's going to be an impulse or anchor leg. So think about a swing or an extension higher. We then have a pullback, which is going to be our A to B. That pullback must come to a very specific Fibonacci retracement level. We then followed it up with another extension, so another move higher. That's going to be our B to C leg. And then finally, we complete a D completion, which is a move back down that goes to the 786 Fibonacci retracement level, taken from the X leg all the way to the A leg. Now, although the 786 is the completion point of the cipher pattern, we look at it as being like the starting point, meaning that everything works in zones. So we're not saying that the 786 is where everything must end and bounce immediately from there, although that does happen, and you'd be surprised it happens more times than not with advanced pattern formations, but rather we're saying that that is the start of our zone. So the zone in which we're interested in buying in this case starts at your 786, but runs all the way down to the X leg. Once it passes the X leg, then the pattern is invalidated. So when you hear the trader say or read the trader say that your D leg is wrong, it's clear that this trader has no idea what he's talking about. And to put some icing on the cake, we don't talk about this enough, but we are the ones that actually invented the cipher pattern, right? One of my colleagues, Darren, way back, I don't even know what year it was. This had to be 2000, maybe 14 maybe, invented the cipher pattern. I won't go into the whole story about that, but pretty much he was looking for something else in the market, made some observations, found it, came up with a thesis and a hypothesis, gave it to a bunch of us. We told him he was wrong and crazy. We tested it, came back and said, you're on to something, and bada boom, we have the cipher pattern. So I am pretty confident in that I know the rules of the cipher and I know exactly where the D completion should be. A little small flex on you guys with that. Now, with that being said, I wanted to turn this into an educational opportunity because this is something that hurts a lot of traders. And hopefully for you guys listening to the podcast, this will be something that will help you along your journey. And I want to break it up into a few areas. And we're going to start with this. One, as a trader, it's important to know your setup, knowing the rules of what you are trading. So if you are trading the cipher pattern, for example, you need to know what actually makes a cipher. What are the rules? How do I know if it's valid or invalid? Specifically, when it comes to the entry, you need to know where is the first place that I should look to enter and where is the last place that tells me that I'm wrong. And have the understanding that although price may spike a little bit past that level, and I think that's what this trader was getting at. He saw the chart and saw the big red candle smash past the 786 and got all into a panic. We need to understand that, hey, the invalid area is the X leg. Has the X leg been violated? We look at our charts. No, it hasn't. Therefore, there's no need to panic. You see, most of trading is staying cool. It's not falling victim of this instant gratification where it's like, as soon as I enter a trade, it needs to go in my favor right away, right? We need to stay cool, calm, and collected. And the more information, the more confidence we have in our setup and what we're doing, the better we're going to be cool, calm, and collected. It's very similar to public speaking, right? I work with a lot of students on a college campus, and they always have these speeches and they're freaking out and they say, what advice do you have? Because I know I do a lot of talking and whatnot, right? I say this: if you're very confident in knowing the information that you're supposed to know, if you're confident in that you know more about this information than those who you are giving the speech to, there is no need to be nervous because you're informing them. We should only get nervous when we don't understand. If we're going up there and we haven't done our research and we're trying to BS and make stuff up, then we're nervous because we might get called out or we don't know, blah, 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 blah. But just like arguing with trolls or arguing with anybody, right? The best weapon you can have if you're trying to stay nonviolent, right? There's a lot of good violent weapons that you can have. I just watched Kill Bill and whoosh, whoosh, right? Anyway, the best weapon that you can have are the facts. If you are equipped with the facts and the knowledge of the facts, there is no reason for you not to be confident, cool, calm, and collected when you're doing what you do. So knowing the specifics of your setup, your pattern, strategy, whatever it may be, is very important to keeping your cool in these situations and not panicking. Second is knowing what trading is in general, right? So take a bigger look at things. In trading, are we always right? No. In trading, in a specific trade, are we right away all the time? No, right? We need to be aware of these. We need to be comfortable with these. And just like the speech example, the more comfortable we are with this, the more acceptance that we have, the better we're going to fare psychologically in these trades. If I go into a trade and I think I need to be right away, every time a trade goes against me, even by like 1 or 2 pips, I'm going to freak out, I'm going to panic, I'm going to bail, I'm going to make a mistake. Or on the other hand, if I know I'm supposed to wait for a very specific signal and price is getting to my zone and it hasn't given me the signal yet and it's starting to do something else, I may have FOMO, fear of missing out. I may rush into a trade, jump into a trade prematurely, and then end up in a situation that I don't want to be in. Both are trading mistakes and both are things that are emotional triggers that help sink trading ships. Bigger picture, not only do we lose confidence and faith in the specific trade, but we also lose it in our trading strategy. And this is why you see so many traders hop and jump systems, right? They learn something, they trade something, as soon as it doesn't win, even if they won like 10 times before, as soon as it doesn't win that first time, they jump ship into something better because they can't deal with the reality of losing because they haven't accepted that losing is part of the plan, right? It sounds weird, right? But losing is part of the plan. If you've created a trading plan, if you've backtested, if you've done all these things correctly, you have a bunch of quantitative data that tells you what your edge is. And I can guarantee that that data doesn't say 100% correct. So just because you lose a single trade doesn't mean it's bad. Doesn't mean that system or strategy is bad. And we're kind of jumping to false conclusions when we think so. You know, think about the Premier League this year, right? We just watched Man United tie Arsenal yesterday. Now, I think we can all agree, Man United, Arsenal, better. I'm not going to say great, they're not having the best of seasons, but better, right? However, they tied. Ask yourself this question when we're thinking about edges and probabilities. If those two teams were to play 10 times, would Man United tie 10 times? Probably not. They would probably tie maybe twice, they'd probably win maybe once, and they'd probably lose 7 times. And that's kind of giving them more credit than they potentially deserve. But our trading is the same way. We can't jump to conclusions over a single result. And this is why we always preach process over outcome. You have to think about the process. You have to think about the probabilities. If you judge yourself off the outcome, you're going to be on these emotional swings back and forth each time a trade wins or loses. Now that I think about it, we just spoke about this in episode 1127, where we talk about the belief, action, result cycle. At the very beginning of that podcast, I spoke to you about a positive and a negative way of that cycle, right? The positive way is that when you do the work that you need to do, you have belief in what you're doing. When you have belief in what you're doing, you take the right actions. When you take the right actions, you get the right results. When you get the right results, your confidence gets bigger and you have more belief. And more belief means more actions, and more right actions mean more right results. And it spirals into a big lump of money. But there's a negative side to that as well. And it's when you don't believe and you don't do all the stuff beforehand to make you believe, then you don't take the right actions, you make mistakes. And when you make mistakes, your results reflect those mistakes. And when those results reflect your mistakes, you have even less belief. I was victim of this. No, I don't want to say victim because I brought it on myself. This is what I did at the very beginning of my trading career, right? Many of you guys know this story about the single moment that turned around my trading. It was, I was struggling for a very, very long time. I had mentorship and coaching, but I was like, whatever. I'm not listening to what you guys are saying. And I remember that I did an A/B split test at the end of the year where on one column I had my trading results, my live trading results, what I actually did. On the other hand, the column I had what I should have done if I didn't make all those mistakes I was doing. And I looked at it, I analyzed it, and I said, man, Akil, if I were just cutting out those mistakes, I'd have this much profit. Because at the time I was blaming everyone else. I was blaming my coaches, I was blaming my broker, I was blaming my system or strategy, right? Everything sucked but me. And that was the moment where I realized that it wasn't any of those things. It was me. I was just shooting myself in the foot by taking bad actions. And from that moment on, it was a process. It didn't happen at once, but I corrected the mistakes I was making. As I corrected those mistakes, I started getting better results. And I started getting better results. I started believing more what I was doing. And I became the confident trader that you see right now, where I can go on losing streaks and not even bat an eye. So to sum things up, what is the solution here, right? Well, one, it's you need to learn about trading. You need to learn what trading is, not just from the specifics of your strategy, the rules, what makes it valid and what makes it invalid, but trading as a general. What are we doing? We are probability masters, right? We're not in a situation where we have false expectations. We're not in a situation where we're coming into the market doing something different each day. We are no different than any other business. We have a set business plan, and our only job is to execute that plan day in and day out with the full understanding that sometimes it'll work in our favor, sometimes it won't. But bigger picture, we do have the edge. We do have the probabilities on our side. And that means that we will be profitable as long as we don't shoot ourselves in the foot. So if you can do these things, you're going to become a confident trader. And it's not easy by any means. Again, you got to get that cycle started. We spoke about that in the past podcast. But if you can do these things, you have a chance to be a successful trader. And what you'll do is you'll have full confidence in yourself and you'll start ignoring what other people say. Because I'll tell you what I did back in the day. I used to be very sensitive to what people said about me on the internet. And I remember that one time I was sitting in this trading forum. I never spoke for the longest time. I was just a fly on the wall. And one day I finally got the confidence to type something in. I was doing good analysis. I was trading well. And I wanted to share my idea and feel like I was part of a community, right? Trading is a lonely existence. So I wanted to have some trading buddies. So I finally typed it in like, hey guys, I'm looking about getting long the euro dollar, blah, 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 whatever reason it was. And I remember that as soon as I did that, right, I shared my analysis, someone right away, like the head person or the most popular person on the chat, poo-pooed my idea. They were like, nah, guys, we should be short. And I was like, ooh, heartbreak. And not only did I have heartbreak because it felt embarrassing, it took me like 2 days to build the confidence to share this idea, and right away, shot down. But I lost all confidence. You know, I looked up to this person on the platform for no good reason, aside from like he typed in the most stuff and had the most stars or highest rating. There's like a point system, whatever like that, based on participation. And when he shared his opinion, I exited my trade, right? I exited my trade because I thought that this guy's opinion was more valuable than the hours and hours and hours and hours and hours and hours of testing that I did to properly quantify my trading and prove that I have a statistical advantage above the market. Seems dumb, I know, but I was young and dumb at the time. Long story short, the trade that I was supposed to enter would have won if I did it. And that was the moment that I said, like, why am I listening to other people? I did everything correct, Akil, but I let someone that left a comment disrupt my flow, influence what I was doing, and literally they cost me money. So if you do the things that you're supposed to do, if you put in the work the way that you're supposed to do it, you'll stop basing your trading decisions off of what people say and start basing them off what the numbers say. Hope you guys enjoyed the pod. If you haven't listened to episode 1127, make sure you go and do that, getting some really good reviews off of that. Speaking of reviews, if you get a chance, please leave me one. It's the best way you can support the show. Rate, review, you know what to do. And I'll see you guys on the next episode of the Trading Coach Podcast.